Risk management goes beyond position management, where you're in the trade and you have to manage your position and make sure that you don't get drawn down. It actually goes much farther than that. It goes into the extent of avoiding positions where the stock will drop, avoiding low quality. This is going to be vital. Okay, this is going to be extremely important. You have got to be avoiding low quality setups. If you're not avoiding them, you're inherently bringing more risk onto yourself for no reason. If you're not avoiding low quality setups, you're bringing way more risk onto yourself than is necessary. And that's just the reality of it. So, number 2 is going to be have max loss. You need to have a certain number or percentage that you hit on the day and you call it a day. Statistically, okay, I have a max loss of negative $500. If I draw down minus 500, there's about a 90% chance that I draw down 1,000, 1,500, 2,000, 3,000, okay? It just is what it is. So with that said, have a max loss, and when you hit it, walk away. It's going to be one of the hardest things for you to develop in your trading career because I still struggle with it. So avoiding low quality setups, max loss. 3, I'm just going to put sizing, okay? So this is going to be primarily you knowing the sizing that you're using, you know what to expect, right? You're not full porting to the point where you go up 5 cents a share and you're like emotional. You're like, oh my God, I got to sell this thing right now. Because you're going to cap your winner, first of all. You're not ready to be trading with that size. And when it draws you down, you're going to be dumbfounded. You're going to be like, oh my God, what have I done, right? And 4 here, let's just put know your support. Okay, know your support. And I'm going to draw this one out. This is going to have a graphic that goes with it. So we'll get to that, okay? Let's put a pin in that one. Know your support. 5, no trade days. This is managing risk. This is recognizing conditions. Okay, this is important. I had almost this entire week was a no trade day for me. And the reason being is because I had one small green day. Then I had a day where it felt literally impossible to get on the green side of a move. Everything I entered, I never even saw it green. And it wasn't poor entries, it was poor market conditions. So, I can take some responsibility. Maybe some of them were poor entries, but given we're in very shitty market conditions right now. Crypto's dropping. When crypto drops, small cap markets are affected. And, it's not the time to be stepping up to the plate, guys. No trade days are fine. Get that through your head. No trade days are fine. You do not need to show up to the market every day to trade. Okay, you can show up and observe. Try that. Try that on for size. So with this said, let's get over to this one. Know your support levels. So when we enter trades, right? Let's say we get this move up on news, something like this, right? We get this big move up, 2 candle move on a 1 minute chart. You get this move up, right? So what are we waiting for? We're waiting for that exhaustion and some profit taking. So you're going to get something like this. And our 9 EMA will be trailing like this. And then we get something like this, some profit taking. Okay? And it might look something like this. And then where are we buying? We're buying the next candle to make the new high right there. Entry. Super simple. This is an A+ setup. Very, very A quality setup right here. Looking for that next 1, 2, 3, 4 candles that continue higher. Okay? Very simple. Your support, right? So you have the max loss of the trade is going to be if this thing reversed and broke this wick, or maybe even the body if you're like really strict. But you have the 9 EMA. Okay? You have the support there, and you need to keep a couple more things in mind here. So if this candle, you enter when it breaks this and you don't get that immediate conclusion higher and it drops below to here, this is your loss. Okay, so stay with me here. Your profit to loss ratio on this is anywhere from like 3 to 1, maybe 4 to 1. Because in this instance, you're risking this much. Let's say it's 5 cents. Okay, you're risking, this is your risk, a 5-cent drop, and then you're out of the trade. And you stand to make all of this once this breaks this level. You stand to make everything up here because you're in here, right? So right here, this candle closes, this one opens, pushes. You're already at your you're 1 to 1. Okay, you're already up 5 cents. You were gonna risk 5 cents. Great, perfect. Now you're gonna look for that extension higher. You're likely gonna get it because it's a high probability setup. You do get that 1 or 2 candles after because you waited for a good quality setup. You're gonna get it. Sell 50% right there. Lock it up, deleverage, let a little bit of runners. Right, we have that term runners. Leave some runners. Light sizing to kind of just build up real light. So like right here would be like a 50% sell mark. And then everything from up here, you're just letting half the position ride up, right? So know your support levels. And this goes into a little bit more. So this is your entry. Let's say that there was a whole dollar level right here. This is $4. And we know that stocks move with great respect at the half and whole dollar for support and resistance. So 354, 455, so on, so on, so on. And typically when you approach that level, that's when I'm looking for that big breakthrough. I'm looking for the big breakthrough, right? So if a stock goes to 1350, I'm buying right there and I'm looking for 1360, 75, 80, 14. Okay, add 14, 14, 18, 14, 20, 14, 50. And it's going to move like that. Okay, it's going to hit those levels and go boom, 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 boom. So you have support here at the whole dollar. Granted, you do have resistance as well, but when this candle closes above it and now is support. So, this candle might test it and you get a wick right here where it comes down, tests it, and then pushes higher. Know your support levels. Know your levels. Half, whole dollars, EMAs, the 9 EMA, right? So you're buying off support. Then you get this close above. Now you have support here with the trade that you're in. And if it goes below it and breaks this level, then you can move your stop loss even higher, right? Because typically if the stock breaks down, right there, you can just call it a day. So I'm going to show you guys something that you're going to be seeing a lot of in this very low market conditions. And, if this lasts a week, 2 weeks, I highly doubt it goes on for more than 2 weeks. I've seen it before, but I highly doubt it. This is going to be a trade pattern that you're going to see a lot of. Okay, so let's just say that this is also $4, this whole dollar level. The way I like to trade is I like to anticipate that breakthrough. I probably would have tried to take this breakout. When it failed, I would have just cut it quickly. In a hot market, it's typically going to surge through. This is kind of forming a pattern that I inherently trade a lot, which is going to be called an ascending wedge, where you get this wedge shape where it starts to kind of squeeze up higher. And you're looking for the breakthrough, that $4 level. And the more and more that it stays there and keeps testing it, the more and more likely it's going to burst through it because there's a seller there or there's shorts. And when it gets above it, it's going to get, people are going to have to cover their short positions. People are going to be buying in, loading up, and you get a parabolic move. So what's going to happen? You're going to get here. You're going to see this candle open. You're going to see it go just like this. It's going to push up. And then this is what it's going to look like for a second, maybe 30 seconds. And you're thinking, oh, here we go. Here's how this is going to close. Okay, so you're going to go from this. So save that in your head. That's called a jackknife candle. This is a candle that happens in very low quality conditions. Happened to me Monday 3 times. 3 times, guys, on the same stock. So that's another thing is if it does it once, it'll do it again. Keep that in mind. So it's horrible because you buy here, you get this big push up, you're up all this money, and you're thinking, oh, I'm gonna let this thing ride, and then all of a sudden it just flushes you out, and there's nothing you can do. And if you have a hotkey, maybe you punch out on the bid like right here, and it doesn't fill, and then you're still on the trade all the way down here, and it's like it's super super difficult. So be careful of that. The way to see it, if you're watching level 2 and you see you're watching level 2 and it's pushing up to that level and this starts to dump red, typically that's a good sign that, it's going to give you a reversal. So keep that in mind and just be cautious. Light size if you get that breakthrough on the key level or the flat top or the whole dollar. Just go light. You don't need to swing for a home run. The market conditions will change. Don't do anything stupid. Don't do anything irrational right now, okay? So keep all of these in mind. No trade days. Boom, that's great. Know your support, great. Sizing, get your sizing under control. Don't full port. Know what to expect. Max loss, have it. Avoiding low quality goes hand in hand with number 5, right? Avoiding low quality includes no trade days. So max loss, let's talk about max loss real quick. Like I said, mine is negative 500. If I hit negative 500, there's a very good chance that I'm going to be at negative 2,000 plus if I keep trading. So walking away saves me in the long run, right? I'm protecting my edge and my future by accepting my loss. You're going to have it. So, how would you determine a max loss? If your average daily gain is, let's say your average daily gain is $200, okay? Plus $200 is your average daily gain. You need to have a max loss of, I would say the max it could be is 200 to keep yourself stable. But you should really aim to have a max loss at negative 150 to 100, okay? So you should really aim to have it at negative 150, maybe negative 100 if you're really good at managing risk. This is going to give you that profit loss ratio that makes it very simple for you to just be successful. If you have 8 green days in a row that are $50 each, but then your one red day of, that 2 week span, or your one red day of that week span is negative $800, you can see how this profit to loss ratio can be an issue really, really quickly. So this should be extremely helpful to you. I hope you took notes. Review this before tomorrow. We're going into a Friday. Fridays are inherently more risky. They inherently require more no trade days on Fridays, which is avoiding low quality setups. And if you hit a max loss, especially early in the day, do not dig the hole. Be able to walk away, accept the loss. You're going to lose. Part of being a trader. So thank you guys for watching. I hope this was helpful. And let's crush it tomorrow. We'll do our best.